Good morning, all. What is meant by journalizing the transaction? So that is nothing but recording the transactions in a journal. So when it comes to journalizing the transaction, we mean recording the transactions in a journal, which is a subsidiary book. Just we'll have a brief idea as to what this journal is used for. So when we say accounting, we are talking about the process of recording business transactions. So we are just going to have an idea as to how we record the different transactions on daily basis, and recording of those transactions in different books is called as a bookkeeping. So bookkeeping is nothing but creation of records. Now for creating these records, we make use of different books. Now those books are called as subsidiary books, where we are recording transactions on daily basis. Okay, so these books are also called as book of original entry because all the transactions are recorded in these books for the first time. So now just to have an idea as to what comes in the subsidiary books, so you will see a list of books which are used as a subsidiary books. Number one, purchase book to record credit purchases, sales book for recording credit sales, purchase return book for recording the goods returned to the supplier, sales return book for recording the transactions relating to goods returned by the customer, then bills receivable book and the bills payable books depending on the transaction details. Cash book is used for recording all the different types of cash payment and cash receipts transaction. Then bank book for recording the bank related, check related transactions. And finally the journal, which we are going to see today in this lecture. So journal is also called as a book of residual entries. So all the entries which you cannot enter in any of the given book will go to the journal. So let us just have an idea as to what journal is going to help you with. So journal is basically one of the subsidiary books which is maintained, and all the subsidiary books when you are using, you cannot enter some of the transactions in any of the given books. Then it will go to the journal as we have discussed in the earlier slide. So if only journal you maintain, that is also fine. Then all the transactions you can record in journal only. That is also easy to perform, but with only small businesses. You cannot use journal for large scale businesses because it involves variety of transactions and number of transaction is quite huge. So each transaction, when we are recording in a journal, we are recording it with both the effects, that is debit and credit effect. It is also called as book of residual entries because all the remaining entries are going to go to journal. So let us just have idea as to how you're going to create this journal. So format is going to help, but before that you need to understand how you have to go the process, I mean. So we are going to talk about the steps. So first step is identification of the accounts which are involved in the transaction. So you are supposed to read the transaction and you need to just identify the accounts which are involved in the transaction. Then once you are clear with which accounts are there, then you need to identify the type of account to which it belongs. I mean, you have to identify whether it is a personal account, real account, nominal account, or representative account. Then once you know which type of account it is, then you can apply the rule of debit and credit by applying the rules of accounting, identifying debit and credit effect. Once now you have identified the account and type, you are able to apply the rule to find out debit and credit effect. Now, once you are clear with all the details, you need to identify the amount of transaction by checking out the discount effect, checking out the settlement effect, if any, that is given in the transaction, and then you are going to record the transaction, right? Now, since this journal is going to have a variety of transactions which cannot be included in the earlier or the other subsidiary books, obviously you need to also state the reason which transaction it was. Since a journal involves so many variety of transactions, you need to also explain the description, or what we say, a narration of the transaction, so that you will come to know what was the actual transactions when you are debiting and crediting the accounts, right? So that is the last step, that is the writing narration and then entering this transaction into the given format. Now I can see here you'll be writing the date on which the transaction has taken place. Then whatever account has got debit effect, that account will write first, then we'll write DR for debit. Then the account which got credited, that we are going to write on the next line. We are going to give some amount of space here. Then the account which got credited, we don't write CR after this. We write 2 before the account which is getting credited. So here we'll write the name of the account which is getting credited, and before that we'll just write 2. Now, being the transaction details, we are going to write it here so that in future, if we refer to this transaction, you'll come to know what the transaction was. Now, you can see first we are writing the debit effect. So, whichever account you have debited, you are going to write in the debit column the amount which you are debiting. Same way, on the next line, we are writing the account which is going to get credited. Now, how much is the amount which you are going to credit? That is shown in the credit column. So you can see here I haven't written anything. Only in debit column I have mentioned the amount. Here, since the account got credited, by how much amount it is going to get credited, I have shown it in the credit column. Now, this is how each and every transaction will be recorded. Then once one transaction is done, we'll draw a line here and then we'll start with the next transaction recording. Right? This is how we are going to create journal, and we are going to record all the different transactions in this journal with debit and credit effect. So you can understand that this journal records debit and credit effect, but it is not in the form of an account.